Have you ever heard how millionaires and billionaires somehow pay less in tax than the average everyday citizen? Well, did you know that you could do the exact same thing with a government account? It's true. Any Canadian over the age of 18 has access to a tax-free savings account. And just as the name implies, it lets you earn money and pay absolutely no tax on any money you earn. So as someone who's interested in finance myself, today I wanted to make a video talking about everything you need to know about a tax-free savings account. So to break it down, first we're going over what is a tax-free savings account. Then we're going to go over why a tax-free savings account is important. Then we're going to give some recommendations as to what you can do with your tax-free savings account, as well as some small details, and I'll probably end it off by asking you to like and subscribe. A tax-free savings account is a Canadian investment account where any investments inside are exempt from paying tax. Since its introduction in 2009, every year since a Canadian turns 18, they start accumulating contribution room. Contribution room is like the limit to how much you can deposit into your tax-free savings account. There's no tax paid on any deposits or withdrawals from your tax-free savings account, but it does affect your contribution room. When you withdraw, you won't be able to recontribute what you've withdrawn until the next year. So basically, at the start of every year, your contribution room is determined, and then you can deposit it throughout the year. When you withdraw funds, you then free up that space in your contribution room, but it won't be updated until the start of the year. So whenever you withdraw from your tax-free savings account, you have to wait until the next year to be able to deposit it again. In addition, anyone who contributes more than the set amount for your tax-free savings account will be subject to 1% a month tax on the amount that you're over. And if you make any money with that money that you over exceeded, that'll be taxed at 100%. You don't get to keep any of it. So definitely something to avoid. In my opinion, a tax-free savings account is one of the most valuable tools we have as a Canadian investor. Yet many Canadians don't know how to use it, or they just use it as a plain old savings account. Despite the fact that it is called the tax-free savings account, it's really more like a tax-free investing account. If you turned 18 this year and started maxing out your tax-free savings account every single year by, let's say, about $6,000, by the time you turn 60, you'll have deposited $252,000. If you invested that money in an index fund, such as the S&P 500, which over the last 90 years has averaged 9.6% return a year, which is pretty solid to say the least. If you invested that money outside of your tax-free savings account, your account would be worth $1.24 million. That's quite a lot of money considering your initial investment was only $250,000. This means that by just investing your money in an index fund where you don't have to do a thing, you're earning about 5 times your original savings. However, if you were to invest that money in a tax-free savings account, by the time you turn 60, your account would be worth $3,343,000. This is all because your tax-free savings account lets your investments grow faster without having to pay tax in the meantime every time you get a profit. So now that we know why it's important to invest in a tax-free savings account, everyone has to figure out how to invest in a tax-free savings account. And that's something that is really up to the individual. Everyone has their own expenses, own income, and own risk tolerance. So everyone's investments and savings are going to be different. However, one thing I can't stress enough is don't start investing unless you've paid off all your high interest debt. There's no way you'll be able to earn a return that's higher than the interest you're paying on your credit cards. So you're better off just paying them off. The ideal scenario is maxing out your tax-free savings account as soon as you can, because this lets you maximize your returns from tax-free compounding. If you're in your 20s or not paying a very high income tax, then you may want to consider contributing as much as you can to your tax-free savings account. However, if you're a bit older or in a higher tax bracket, you may want to consider an RRSP. Now, that's a subject of its own, and we can probably cover that in a different video. Finally, when it comes to investing with your tax-free savings account, it all comes down to your risk tolerance. This is your income, expenses, and your personality. If you're someone who doesn't really like to take big risks, then you can park your money in something like a high interest savings account, where you can expect to probably earn about 1 or 2%. Nothing great, but it's not terrible. If you're someone with a higher risk tolerance, then you consider more risky investments like all in on Tesla. However, if you fall somewhere in between no risk and ultra risk, then you may want to consider passive investing. This is index funds and dividend stocks. And finally, there's some small details I want to share because these might get glossed over and some people do ask them. Any money you lose in your tax-free savings account is not tax deductible and reduces your contribution room. Foreign investments, such as US stocks, if you get a dividend on them, then you may be subject to a 15% withholding tax. You cannot use margin in your tax-free savings account. And finally, you can have more than one tax-free savings account, but the total balance across all of them can't exceed your limit. So in the end, there's a lot to learn about a tax-free savings account. But if you put in a little time, using these tools can help you a lot. The government puts them right in front of us, but most of us never learn how to use them. Just by learning a little bit about finance and saving consistently, you can set yourself up for a pretty good financial future. So anyways, I hope you guys max out your tax-free savings account. And if you enjoyed this video, consider liking, consider subscribing. If you have any questions, comments, you know where it is. Thanks for watching.